Blackstone spent years on the boat, during which time it matured and expanded at a rate that no one imagined was physically possible. They began in office buildings, then moved on to warehouses and hotels, then moved on to apartments, and finally settled into people's homes. Blackstone ingested every parcel of land and building that it could get its hands on, and it appeared as though their expansion would never come to a stop and that they would keep expanding forever. On the other hand, things started to go awry behind the scenes. As time went on, lies began to surface, and issues arose that could no longer be ignored. It came out that rather than being a robust business model, Blackstone was really all built on what essentially amounted to telling falsehoods and facts and hoping that no one would ever notice. This was discovered after it was thought that Blackstone had a solid business strategy. However, we have seen, and continue to notice, that there has been a shift in the wind. Welcome back to the Financial Fortune YouTube channel, your ultimate source for the latest news and insights on the world of finance. Today, we have a gripping and alarming update that is sure to send shockwaves through the global economy. Brace yourselves, as we delve into the unfolding chaos surrounding what some experts are calling the worst crash ever. In this video, we'll explore the stunning collapse of Blackstone's bank run and its far-reaching implications. So, let's dive straight into the heart of this financial storm and uncover the turbulent events that have shaken the markets to their core. Blackstone is now in a defensive position. Their revenue has been decreasing rather than increasing, which is a very concerning trend to see in their company. Those with inside knowledge are selling their company shares. Blackstone is making a desperate attempt to pay off its obligations by selling off their flagship properties. They have not yet defaulted on any of their payments, but this might be their last chance. Blackstone has arrived in full force, and in this video, I will explain what is actually happening on as well as why the mainstream media is concealing this information from you because they find it so exciting. Why? In spite of the mountain of data indicating that this failure is real, the news outlets are doing all in their power to distract you from the issue and protect their innocent kid. That would be the Blackstone. Who exactly is Blackstone, and how did they emerge out of nowhere to become the most successful alternative asset manager in the world? Although Blackstone is not the same as BlackRock, the names are sometimes confused because of their similarities in pronunciation and use. Yes, and both of their founders used to work together before they went their own ways and established their competing businesses. And whereas BlackRock concentrated on traditional investing with equities and other publicly traded assets, Blackstone moved in the direction of alternative assets, particularly real estate investments. BlackRock is smaller and less powerful than BlackRock in nominal terms, with around $1 trillion in assets under control compared to BlackRock's $8 trillion. However, in fact, Blackstone pools a far bigger amount of profit for each cent that is in their control, hence, the two companies are actually relatively equal to one another. Nevertheless, this wasn't always the situation. Blackstone was regarded as the ugly duckling for several decades during its history. However, all of that started to shift in the aftermath of the financial crisis that occurred in 2008. Everyone is aware of what took place today, but quantitative easing was initiated, the printing of money began, and we witnessed a ludicrous bull run that surprised everyone. In particular, alternative assets flourished at a rate that had never been seen before in the annals of history. Certainly, real estate prices were low up to the year 2012, yet, after that year, we had very much 10 consecutive years of tremendous, persistent rise that just refused to halt. And Blackstone was the most successful company operating in this sector. And they grew great degrees by taking advantage of the housing bubble. In instance, the post-COVID housing bubble helped Blackstone make literally billions of dollars, and even reached the threshold of $1 trillion in revenue for the company. However, this is the point where everything started to move in the wrong direction. During this upward trend, it appeared as though Blackstone was just in a league of their own compared to their rivals. Their flagship fund, the Blackstone Reach, saw a gain in the value of its real estate holdings at a pace that was far higher than that of their rivals. Consider the following scenario: Blackstone and a competitor both own identical office towers, and the competitor asserts that the value of the property has increased by 5%. After a period of 12 months, Blackstone would report a 10% increase in their own. No one really knows what was going on that caused this to happen, but if I had to bet, I'd put my money on Blackstone lying about their values. There is no specific market function that can be used to value buildings of this type, so Blackstone could truly say whatever they wished. This resulted in significant new revenue streams for Breda, growing the company's market cap to about $200 billion, but it also led to the company's own demise. At the end of 2022, when property values began to plummet, Blackstone saw its carefully constructed house of cards begin to collapse. By the time November came to a close, Blackstone had put a stop to any and all withdrawals from its flagship fund that were being made by customers. Investors from Blackstone scurried to exit the building, only to discover that the exits had been locked securely. Their capital was stuck in what was now a failed fund, and appraisals were falling while the fire burned behind them. For the past 7 months in a row, Blackstone has been making frantic efforts to put out a fire that is raging within their most cherished fund. In addition, for the past 7 months in a row, Blackstone has been completely and utterly unsuccessful. And as if that wasn't bad enough, Blackstone has now begun to default on its loans, making the situation much more dire. They have a debt on their properties that amounts to literally billions of dollars, and they are unable to pay it off completely. Therefore, they are simply refusing to pay it off while at the same time maintaining the pretense that it is of no consequence. They are unable to make good on the repayment of a bond for $562 million that was due at certain offices in Europe back in March. They begged and pleaded with their investors for an extension or some type of payment plan, but nothing was agreed upon, and as a result, they made the decision to publicly fail on their obligations. Then, a month later, they defaulted on 2 more bonds, one based in New York worth $270 million and one in Las Vegas worth $325 million, bringing their total failed debts to greater than $1 billion. Despite this, Blackstone continues to claim that it is not a big deal, and that the $1 billion in debt is nothing more than pennies to them. But if that were the case, why wouldn't they just pay their obligations if they owed money? Why have they failed to return 3 different bills if this wasn't symptomatic of a larger problem? And the situation is only becoming worse as time goes on? However, the mainstream media is set on ensuring that Blackstone is able to carry on its operations with virtually no more scrutiny. This is a company that is worth $1 trillion that is in debt up to its eyeballs, and is defaulting on loans that are actually worth more than $1 billion before the recession has even begun. However, this is not the end of the mayhem, since the directors of BlackRock are actively attempting to withdraw all of their money at the same time, as they prevent their clients from doing the same. At a time when the firm was beginning to see its revenues dry up and it really started to fail on these loans, the company's founder and current CEO, Schwartzman, pulled away more than $1.26 billion for himself from dividends and compensation. This action took place in the early years of 2023. After paying their CEO more than $1 billion for putting them into that debt problem in the first place, and other insiders are selling whatever they can as well, maybe now it makes more sense why they weren't able to pay off that $1 billion debt, after paying him off for getting them into that debt problem in the first place. They have high hopes that they would be able to utilize this fund to attract affluent investors from that continent, which will allow them to stay in business even if everything else collapses. And this play has been performed just in the recent last few months. However, things are already not looking positive in this sector, as Blackstone has already opted to remove people responsible for this new fund after not obtaining the results they anticipated. This indicates that Blackstone is not satisfied with the performance of this fund. Because of this, they have decided to bring in new meat in an effort to improve this offer and make it eventually successful. As we reach the end of this eye-opening video, we are left with more questions than answers. Will the collapse of Blackstone's bank run trigger a domino effect, leading to a full-blown global financial crisis? How will governments and central banks respond to this unprecedented challenge? Are there any safeguards in place to prevent such catastrophic collapses in the future? Only time will tell how this situation unfolds, but one thing is certain: we are witnessing a defining moment in economic history. Stay tuned to the Financial Fortune channel for more updates on this developing story, as well as invaluable insights into navigating the turbulent waters of the financial world. Remember, knowledge is power in these uncertain times. Until next time, may your investments be wise and your fortunes be secure.